Welcome to Trading Lounge and the US indices for Friday, September the 3rd. We'll start with the Russell, then the NASDAQ, and then the S&P. And with the Russell here, as you know, we're looking at it like this. And we've got wave 4 here, so we're looking for 5 waves in this move through there. And we'll just go to the hourly chart and see how that's going. Because minor group 1 here, the 2,300, that's where we're going to see a bit of a dance here. And we want to see it as a tested support with a classic trading levels pattern sitting on it like this. So if that's the 2,300, we'll see the arrival, the reaction, first high above the level, and that's where we'll have our trade set up there. So let's have a look at that on the 1 hour chart. So from the low there, I've also got another little count there as wave 2, but we don't need to worry about that just yet. So we've got wave 1 here and 2 here, and then we've got a little 1, 2, 3, 4, 5 that we counted up there, and a little ABC here, and we'll just talk about yesterday, expecting it to move higher, so that's all good there. Don't need that. So it's just really sort of arrived here as such. It hasn't sort of sat on there, but I don't think it's going to give us much problem. It should just, because it's in the 3rd of the 3rd, and we could probably look at that as 1 and 2, it should just sort of continue onward there. One of the other little subtle points here is that this is a minor level at 2,300. We can go to 2,330. That's subgroup 1. And with subgroup 1, we can, if we get support on top of subgroup 1, that's going to leave us, that's going to tell us that we're leaving minor group 1 at that point. So they're all the number 3s, and then the micro group 1 would be 33 in that case. Let's move along and have a look at the NASDAQ. So with the NASDAQ here, we're going to go from the daily chart, go right through different time frames and so on, but I've just been experimenting with different counts, so yeah, not to concern ourselves too much with any of them, but on the tick chart we'll just continue to work it at that point. So let's dive in and start working this 5 little wave structure there. Let me just see. I mean, the first one coming out of the gate here is obviously not correct, but with wave 1 and 2 in here, and it makes a nice wave 3 and 4 here, and then we can count 5 waves to have it completed at that point. So I wouldn't take it to heart too much. It does appear that this little move in here is corrective, but if you've got this count, it kind of fits. So let's just continue to move in and have a look at some other ones. Like I mentioned, we can look at them in different ways. But it's really on the tick chart that we're going to be sort of tracking it down a little bit. So 1 and 2 here, and then 1 and 2 here, and then 3 and 4 here, and then looking up for 5, and then 4 and 5. So yeah, that seems sort of plausible. We don't have a bear market situation yet. We could say to ourselves that this 15,500 at this stage, if that became the retested resistance, then we would start looking at a top being in place, but otherwise we just stay bullish. So these are just different count ideas in case you've got something for yourself. We looked at this one yesterday as well. In this case here, we're just looking at wave 4 with wave 1 and 2, and 1 and 2 at this point, so that's pretty much sort of done and dusted. It hasn't really pulled back much. It's a good case for 5 waves to that point in terms of using that little 1 and 2 in here as well, but we'll look at that count in a moment. One of the things here, and we also mentioned yesterday as well, it's really trying to, it never really had a good support at the 500 here. It just sort of burned through that in a series of 1s and 2s really, starting with this wave structure here. So it's looking a bit tired up here. It just can't get into group 2, the 65 there. Yes, it's popped its head up there a couple of times, but it hasn't found support in there yet. The other point too with all of this too, we were talking about the bullish weekly cycle. Well, always talking about it, but Thursday is normally the bear day, and then the markets start to shore up on late Thursday afternoon. and that leaves Friday and Monday to be bullish. So that's what we'll be looking at, and that's what we're looking, that's what we're working with as well. So working the bullish weekly cycle with the Elliott Wave and the trading levels and volume if you're trading that, tick chart. Is that enough? Let's just go back a little bit further, shall we? This is account that this is the count that I like, and this is my conservative count, so this is the one that we should use here. Now we have broken the trend line here, but you would expect that with from a wave 2 trend line to a wave 4, so that's just all normal, and that helps me actually confirm that we're working with a wave 4, so that's also good. The bullish weekly cycle has seen us on a bearish move, so that's also good. And yeah, looking at this here as 1 and 2 here, then 1 and 2 and 3 and 4, and then all this mess here counting up for wave 5. We don't need to go into that. We've been already been looking at that along the way. So yeah, let's go in and have a look at this. I think I need to look at this a little bit closer actually. Do we have that low in place? That's the question. So I think what I need to do here, I think we'd also look at that as wave 1, but I think what I'm going to do here is just go from 100 ticks down to 10 ticks. Might need to bring in a bit more data. Let's just get a clear picture here for that. Okay, so let me just work through this. I just want to do it for myself, but you're here with me. So we've got this move down through here. We can look at as wave 1, and we could probably look at that as wave 2 with a 1 and 2 and a 3 and 4. So in a way, there's 5 waves down there. Now, that's all good, and then we've got this corrective move. So none of that sort of bothers me. That's all good. But so this would be the A wave here, the B wave here, and the C wave coming down here. This is what we need to figure out here, because I'm looking for 5 waves here. And of course I can see this is the first leg here. We've got corrective overlapping wave structures here, so we can look at that as 1 and 2. That's obvious. But this wave 3 here, which would be this length in through here, is just is that a bit shorter than the other than that? Is that shorter than wave 1? Yeah, it is a little bit, and then that's it. So our problem here is that we could have a bearish situation because wave 3 is the shortest. So we could look at that as wave 1 and 2 there, and then down for 1 and back for 2, and well, it'd be a 1 and 2 and 1 and 2, because this is pulled back up 56. This can't be we couldn't look at this as 1, 2, 3, 4 here, because wave 4 is pulled up way beyond the 38.2%. It's way up at the 62% or whatever we call it, 61.8%. So that's not the case. So we could look at it like that. We could look at it as wave 1 and 2 and 1 and 2 and 1 and 2 coming for a bigger bear market down that way. Otherwise, if we were going to look at this as 5 waves here, then we would have to suck it up that's because there's 5 waves in this leg here. I don't know if you can see them, but 1, 2, 3, 4, and 5 there, and 5, because I can see inside them. So do we let the Elliott rule be broken, and that wave 3 is going to be a tad shorter? It's not by much, but it is a little bit there. So that is an issue. So this is where you've got to be a bit philosophical about things. So what we can do is just investigate this uptrend here, and we need to compare this with the S&P as well. So we've got 1, 2, 3, 4, 5 here, then an A and a B and a C here. We've got 1 and 2 and 3 and 4 and 5 here, and a 4 and 5. So, and then we've got 1, 2, 3, 4, 5 here with an A and a B and a C. So in a nutshell here, we've got 5 waves up here, and then we've got this B wave. We've got that corrective move there. So what's this then? So we could call that 1 and 2. And that's 5 waves to there. Looks like 3 waves to there, and there are 3 waves to there as well. This 5 wave bothers me. So, but what I could say to you is, because we're up at that 61.8%, I could say to you that we can go long above there, because that would break it at that point, because it could only be bearish if this, from this high to this low. So finding support on that 50-60% retracement level there. So then we can gravitate over to the closest largest number, which is 600. So it's a matter of filling out the boxes, you know, to get enough to be, do you have enough bullish boxes ticked as such? So if I was going to trade this, that could be corrective actually. Let me just check on that. It looks impulsive at the start, but I was thinking 1, 2, 3, 4, 5 there. That would leave this here as the A wave, the B wave. So that can count as an ABC. So I'd look for a classic trading levels pattern here. If I was trading long here, this would, you know, so the classic trading level pattern, sorry to harp on about this, but the arrival, the reaction, the first high above the level, the ABC. So taking that picture, that image there, that would be the arrival, that would be the reaction, that would be the first high above the level. So in fact, we could go long here. You could also probably get a better situation. You'll get another little one in here as well with all of that before pushing up. But I'm just going to leave it at that for the moment. So really, there's problems all the way around, and life is not perfect. And when you get down to this smaller degree of structure, you know, there's going to, I've got to clean this up because I won't come back to it and I'll forget it, and I can only have so much stuff on my chart. So that's the situation there. So yeah, you just got to, you know, so Friday, we expect Friday to be bullish. We expected Thursday to be bearish. We expected Thursday afternoon to shore up. We can see that we're getting an impulse wave to here and a corrective wave to here. This is broken up here, but it's not a very nice picture here. End of session kind of stuff in a way too, I guess. So we can go long. I'll just leave it there. We can go long above there, but you know that you can go longer closer to that there by the time the video comes out and all the rest of it. So that's where we are. So wave 4 can be completed. The wave 3 in B to C is a little bit short, but being a bit philosophical about it. So when you get situations like that, you don't want to shovel it all in there. So if you can get a small position here that's not going to bother you and leave a wider stop, then you can look to build in on 60 on 15,650 on my 65 number within group 2, so 650, 15,650, and then also onto 72 as well. Let's check out the S&P500. So on the weekly chart here, we've got, just going back over this, that's my length of wave 1. Putting that on wave 2, we've still got wave 3 shorter than wave 1 here. So it can be shorter, but if it's going to be shorter, then we'll expect wave 5 to be shorter than wave 3. Normally what I would expect is wave 3 to reach the level here and then have wave 4 and then wave 5 up here and then a big ABC after that. Now, will it get up here? I don't know. I mean, we've talked about that all the way up here, didn't we? I mean, even when we were down here in COVID days here, we picked the low here. We looked at the medium level at that point, which is copying that down. We can put that in at the 3,000 because you got 1, 2, 3, 5, and then halfway between, two major levels, because that would be 1, 2, 3. So, but this would be a medium level here. So when this COVID thing was happening down here, we counted down and called the low in. And even though we called the low in here, we didn't want to go long on the low. We don't need to have a high risk trade like that, but we waited for support to sit on here, classic trading levels pattern sitting on the medium level here, and then we went long from that point. So it's just a matter of being, you know, it depends on how much risk, initial risk, and how much exposure you want to carry, and all those sorts of things. We're tracking 2 counts. One is shorter, one is longer. Let's go to the 2-day chart here, and we're really just interested in the short account at this stage because we want to be practical about it. So we've got a wave 3 sitting here. The wave count doesn't really add up to that intermediate wave 3 being there. The other one is over here. So I like both of them. So I don't really have a preference. I just keep counting, and if I see, you know, on tick charts, I see it bearish, then you know, we start looking at that. It's not like I'm fixed on being a bullish person or fixed on being a bearish person. I'm just fixed on the facts, on the evidence. So in a nutshell, we're just really looking for wave 1 and 2 here. So we'll just go into this chart here, just drill down there, and there's a different way to count this as well, but it doesn't really matter. But 1 and 2 and 3 and 4 and 5 here for the end here. So all we've been working through here is from wave 2 to 3 here. That's where we've been working. So we're just going to continue into that here. I know there's problems with that wave count, but I'm not going to be bothered with it just yet. So we've got 3 and 4 here. In this case, 1 and 2 and 3 and 4. We've got overlap there, so that can all be counted differently. So that's not a big deal. We've got another count that sorts that out. Our main thing is really just counting 1, 2, 3, 4, 5 for 1 here and 2 here. And this is the length of wave 1 here. So we want wave 3 up here to be longer than wave 1. So we've just been counting, and we've got a couple of different ways we can count this, but 1, 2, 3, 4, 5 for 1 and 2, and then back for 1, ABC for 2 that we're looking for yesterday. And then we just want to see this push up here a little bit further. So in that case, we can just continue to drill in here. So we've got wave 1 here and 2 here, and we've got our little 5-way structure there that could be counted in different ways, but that's okay. It still ends up the same with wave 1 and 2. And yesterday we're looking at this here as wave 1 here. We're looking for Wednesday and Thursday to be the swing days, the ones that take your stops out. So now we can take, this is a little 1, 2, 3, 1, 2, 3, 4, 5. So that's all beautiful. We can put that there now. We can put that there. It looks like a little 5 waves there. So that's all good. We'll put that there. Put that there. Put that there. Bring that back down here. This is the 4,500 is the minor level, and then this 1, 2, 3 over here is, well, they're it's all subgroup 1, the midpoint subgroup 2 here, 65, 72 and 80. So it just breaks it down. But what you can see here, and this is what group 1 is all about, is finally it looks like we're getting some, you know, support here for this. So we've got little 5 waves up here for 1 and 2, and we're looking to go long above here if you want to get a better position. That we'll look at that in a bit more detail. Yeah, so that's really about it here. But what I want to say is that we want to get support on group 1, which we're getting. The next little issue is at the 5 here, the midpoint, the 50, the 45, 50, and then we've got group 2, 65, 72 and 80. So markets travel quite quickly between these levels, 3 and 5 and 5 and 8, and in both directions as well. But yeah, so let's just go to the tick chart. See, in this case, I've got it as wave 1 and 2 here, and then 1 and 2 up here, and so on. So from wave 2, we're looking for wave 3 there. And this is my conservative count, so that's all good. We can stay with this. So we've got wave 1 and 2 here, and we've been counting all the way up here on the tick chart for 3, 4 and 5. And then so wave 3, 4, and then counting 1, 2, 3, 4, 5 up here for this. I'm just going to try and do a better job in labeling things, so because I just expect people to know, but that's not really good enough. So we went from wave 3 to wave 4. We've been counting for 1 and 2 and 3 and 4 and up for 5. We're looking for an ABC pattern through here. Not the best in the world here, but the A wave was nice as 5 waves. The ABC for the B wave was cool. C wave's a little bit awkward, but we'll have to look at it as wave 1 and 2 and 3 and little 4 and 5 in there. Looks impulsive up through here. We talked about we could go long yesterday above this sort of B. We'll go long above here, but could bring that down here. Yeah, so now we've got an impulse wave up here, and what I could say is you could look to add to your position above, because that's an A and a B and a C here, so we can add there as well. So yeah, you could have added here as well, all that sort of stuff. This number, so we've got from 30 to 50 here. So I can see that this 40 is playing out here. So that's going to be important. We can use that. So you'll get a little classic trading levels pattern there. So instead of just taking it here, look for a little, classic trading levels pattern sitting in that space. So it will be the arrival, the reaction, blah, 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 and over here, and all pretty sort of simple. So yeah, so look, we're going into wave 3 here now, so that should move along quite nicely coming into Friday, and we can put that here for wave 3, 4 and 5. So Friday, Monday to be bullish in our bullish weekly cycle. And that's it. We want 5 waves between there if you can count them, so we can start bringing these little dudes into, get them out of bed, get them back to work. There we go. We'll leave it at that. So yeah, I'll just leave it at that. I don't think I need to do any more. So we're pretty safe on the long side of things. For stops at this point, we can just put the stop here, because you could probably put it just under there, but you just got to be a bit careful about edging your way forward into that. But if you're long anywhere in the market, then that shouldn't be breached at that point, okay? Alrighty, thanks for tuning in. Enjoy the weekend. Cheers.